This week on Business Brief, we look at the impact of a dearth of economic data caused by the government shutdown. Then, how gaps in federal crop insurance leave some farmers vulnerable. Welcome to Business Brief, Missouri Business Alert's podcast focused on the business news and issues shaping the state. My name is Riley Hindle, and I am joined by my co-host, Noah Grabianski. Noah, how are you doing this week?
I am good. It has been such a busy news week this past week that I feel like I am still catching up on all of the various current events that are happening all at once.
Yeah, tell me about it. It has been a couple of late nights on my end working just to stay on top of it. It's like tons of negotiations to report on. Labor, government, you name it. But I don't want to give too much away because we're going to get into that with our headlines.
Then I guess we better just get right into the headlines then.
Yep, start us off.
The longest shutdown on record is over after President Donald Trump signed a government funding bill Wednesday. The bill reverses the firings of federal workers since the shutdown began, protects workers from further layoffs until January, and guarantees back pay. The bill did not include an extension of tax credits for health insurance purchased through the Affordable Care Act marketplace, which will result in premiums more than doubling on average for millions of Americans.
Union machinists who have been on strike against Boeing since early August voted to accept the aviation and defense company's latest contract offer Thursday. It includes an increased ratification bonus, average annual base pay, and sick and vacation days. The deal also guarantees that no union members will be displaced. Workers are set to return next week.
Governor Mike Kehoe this week announced plans to introduce legislation before January that would eliminate Missouri's income tax. The current 4.7% income tax generates about 63% of the state's general revenue. A potential tax cut could exacerbate dwindling budget reserves.
As part of the government funding bill, a provision will ban hemp products from having more than 0.4 of a milligram of total THC per container. That means an estimated 40,000 food establishments and smoke shops in Missouri could be banned from selling the product next year. Another 1,800 food manufacturers could be affected. For some businesses, that would mean losing nearly half of their revenue. However, one Missouri lawmaker has signaled plans to file legislation for regulating hemp-derived edibles and beverages.
The Kansas City Chiefs have put out a request for proposals to design a new stadium in Kansas across the state line and about 20 miles away from their current home in Missouri. The move does not mean the Chiefs have selected the site for a new stadium. Also this week, Missouri's governor floated the option of installing a retractable roof as part of a renovation of Arrowhead Stadium, the Chiefs' current home. A roof would be eligible to use the tax incentives for sports teams Missouri passed this year in an effort to keep the Kansas City Royals and Chiefs in the state.
As Missouri has passed a slew of anti-LGBTQ laws over the past decade, new analysis found that those laws are pushing people and revenue out of the state. Analysis by the Movement Advancement Project estimates that at least $362 million in household income have left the state. Officials and lobbyists previously warned lawmakers that the laws depicted the state as unwelcoming and were threats to business development. For our first story, we're looking at how the recent government shutdown has affected the flow of economic data and what that means for business decision makers. Missouri Business Alert reporter Bella Zelensky has been following the story. Bella, thank you for joining me today.
Thanks for having me.
So this was the longest government shutdown in U.S. history, and obviously it had wide-ranging effects on the economy. But for this story, you looked at one specific facet, which was economic data. So what did you find there?
A lot of missing information. For weeks, key federal agencies stopped releasing their usual reports on things like unemployment and consumer spending. That left investors and policymakers working with an incomplete picture. For example, the Federal Reserve Bank of Kansas City relied more on its own research, especially its Labor Market Conditions Indicator, or LMCI. It normally draws from 24 data sources, but more than half of those are federal. So during the shutdown, the Fed had to depend much more on private data. Jose Mustre Del Rio, a research and policy officer at the Kansas City Fed, told me that the remaining private data sources can still give a relevant indication of the state of the labor market. However, the lack of this federal padding can cause single data points to have an outsized effect on the study. He brought up the example of a spike in job cuts in March due to widespread government layoffs. This was a significant point in the full LMCI dataset, but the spike appeared even sharper on the private study because it incorporated a smaller sample of data.
This kind of effect was exacerbated in our restricted LMCI because it's really kind of, as its name suggests, it's really restricted on the amount of information it can key off. So in some sense, it takes a lot of signal or more signal from that data point.
Okay, so it sounds like with fewer data sources, one extreme result is more likely to skew the statistical picture, which makes sense. And you're saying investors during the shutdown may have been reacting to that limited information.
That's right. Private firms like Challenger, Gray, and Christmas continue to produce their own reports, but these come with potential pitfalls. Last week, Challenger released its monthly jobs data, and according to the report, October's job cuts were the highest for the month since 2003. A stock sell-off followed, with the Nasdaq 100 and S&P 500 falling by 1.5% and nearly 1% respectively. Mustere del Rio says that this shows investors are latching onto any source of available information during this data deficiency.
It seems like every little bit of information that we can get about the labor market gets very scrutinized or amplified. So if the labor report would have come out saying payrolls are more or less where we've seen them past couple months and the unemployment rate didn't change, probably there would have been the Challenger Christmas probably would have had less of an influence.
So it sounds like private data alone can't capture the broadest picture of the labor market. What other issues did you hear about with these proprietary reports?
Kevin Cleason at the St. Louis Fed told me those reports often represent bigger companies more accurately, and these may be trying to influence the narrative around their financial performance. So they can also include other factors like overseas employment or overseas operations, so it can be tricky to say that every data point from these companies are reliable. Instead, Cleason said that he turned to weekly unemployment claims, which were still being collected by the states, and for now, those numbers don't point to a recession.
And now that the shutdown's over, will that data flow return quickly?
Not immediately. Economists expect older reports like the September jobs data to come out soon, but other releases like inflation and spending could be delayed another week or two. Cleason also told me that replicating some of those surveys won't be easy. Without federal employees, there was no one to collect public survey data necessary for many of those calculations.
So even though the shutdown's over, the ripple effects are still being felt.
Exactly. The data will come back eventually, but confidence might take longer.
Good to know. We'll have to keep an eye on that then. Bella, thank you so much for sitting down with me today. Folks, you can read Bella's full story on how the shutdown disrupted economic data at MissouriBusinessAlert.com.
For our next story, how crop insurance policies let some farmers slip through the gaps.
When you say slip through the gaps, what do you mean?
Well, for farmers with diverse crops or that produce fruits and vegetables, it can be harder for them to get insurance on their crops.
Oh, so what can farmers do about that then?
Well, Harshawn Rattenpaul, a reporter with our partner newsroom KBIA, has been looking into that. Here's that story.
At the Columbia Farmers Market, Abby Ennis stands behind a table lined with potatoes, garlic, tomatoes, spinach.
We have some red Russian kale. We have a couple different varieties of turnips, different varieties of radishes.
But for a few markets last year, the table was a little bit emptier.
We planted hundreds of pounds of seed potatoes and got 10 inches of rain within 10 days, and they drowned, they rotted.
A few years before, Ennis tried to see if she could get crop insurance for her 15-acre farm in Howard County, but the agent told her they don't cover a crop unless there's enough of it. So she ate the entire cost of those rotted potatoes. Crop insurance is supposed to protect farmers from that sort of disaster. Taxpayers foot most of the bill, contributing almost $13 billion last year. But not all farms enjoy equal protection.
Anywhere between 90 and 100% of corn, soybean, and wheat acreage in the United States is covered under some form of crop insurance policy.
That's University of Missouri Extension Agricultural Business and Policy Specialist Ben Brown.
There is, I would say, larger barriers to entry for fruit and vegetable producers.
Most crop insurance policies protect specific crops by using a baseline of the farmer's yield or revenue. Duncan Orlander with the National Sustainable Agriculture Coalition says that creates an incentive to produce as much of that crop as possible so your insurance payout doesn't decrease.
Farmers who don't want to necessarily change because they don't want to lose the security of crop insurance.
That means some farmers might be hesitant to try conservation practices that could produce long-term gains but might temporarily decrease yield. Also, while a farm with 1 or 2 row crops can be covered by a relatively simple policy, protecting a diverse farm like Ennis's is complicated. That's even though growing large volumes of fewer crops can have negative environmental consequences due to the chemicals, land, and water needed. There are insurance products that ensure the revenue of diversified farms, but Orlander says not a lot of producers know about them.
The paperwork is pretty intense, and insurance agents don't often have the awareness or interest in selling those products.
So, crop insurance may keep some farmers stuck in their ways. But economist Corey Walters says it doesn't have to be like that.
If you could link additional premium subsidy or some incentive to also do something else in the conservation world, that seems like a great place to operate.
For example, Iowa gives farmers a discount on their premiums if they use cover crops, a conservation method that involves covering soil with crops that won't be harvested. But just like with whole farm revenue insurance, education about these methods and programs is key. Back at the market, it's been a busy Saturday. Ennis just sold a bundle of greens, a bag of radishes, and 10 bunches of onions.
Change. Have a great day.
They came out great, but if they hadn't, none of it would have been insured, in part because she's never considered whole farm revenue protection made for diverse producers like her.
I haven't heard about that, so that's new to me.
This year, she's trying to grow sweet potatoes, and she still doesn't have insurance against floods, drought, or deer getting to them first.
And now it's time for us to get into our words of the week. Noah, what's your word this week?
My word is veterans.
Okay, Veterans Day was this week, so I'm guessing your word is related to that somehow?
Yes, with the holiday this week, our reporter Bella Zielinski looked into a new report about the contributions of veteran-owned businesses to Missouri's economy.
Oh, cool. What did she find?
Well, Missouri exceeded the national average for revenue earned by veteran-owned businesses. They generate 2.3% of the state's business revenue, and that's compared to 1.8% nationally.
Interesting. What types of businesses are we talking about?
The sector with the most veteran-owned businesses is arts, entertainment, and recreation. About 8% of those businesses are veteran-owned. However, veterans bring in the largest percentage of revenue in the mining, quarrying, and oil and gas extraction sector. They account for 22% of the revenue in that sector. That's all I've got this week. What's your word, Riley?
My word is pennies.
Now, I know that there will be changes to the 1-cent coin, but tell me about the latest.
Well, the U.S. just officially minted its last penny. The government decided to stop making them since it costs about 4 cents to make just 1 penny, so it's estimated that it'll save taxpayers $56 million a year.
So what does that mean for businesses and for me, because I collect coins?
Well, don't worry, pennies can still be used to make payments, but for businesses that accept cash, they'll likely have to round prices up or down to the nearest nickel.
Does this mean that any penny that I find on the ground is even luckier now?
I mean, possibly, if you can even find them after this.
You'd be surprised what you can find if you look at the ground. All I'm saying.
For our closing thought today, here's Jose Mustre del Rio from the Kansas City Fed again, talking about how the growth of private data has spurred creative approaches to measuring the economy.
There's just so much other measures that we can use that aren't maybe necessarily exactly like payrolls or unemployment, but they're still all very informative about the labor market, and you always would rather have more information rather than less.
Well, that's all for this week. The M33 Project provided the music for this episode. For my co-host Noah Grabiansky and editors Trevor Grandin, Kelly DeRook, and Michael Stacy, I'm Riley Hindle. This has been Business Brief. Thank you for listening, and we'll talk to you next week.